Good Fed Day, everybody. What a day to have Danny Jisa from CBOE, where he's really specializing in VIX, mini VIX. And before we get started, there's a disclaimer. John, anything you want to say before we get going?
No.
Okay. So welcome, Danny. Great to see you. It's been a while. I'm going to start. Can you unshare your screen then, John?
You got it.
Okay. So I want to talk about the VIX here.
Yeah, thanks for having me, Coach.
The third time.
Oh,
Right.
you know how I like threes. That's it. Then
I do third day up.
We've completed the trilogy with Danny Jisa. So Danny, I have VIX up here.
Great.
We've had a nice little pullback with the really sharp, serious rally we've had in the S&Ps, and a lot of people are hoping that the Fed will commit to only raising half a basis point in December. I don't think he's going to accommodate that or commit to that. So, what are you seeing happening with order flow and money flow in front of the Fed? A lot of protection being taken here.
Yeah, no, and thanks again for having me, Mike and Coach. Third time's the charm. I think that with VIX, and first off, what I say is my opinion. I know we put the disclaimer up there,
right,
but I just want to throw that out there. But no, I think that we're seeing a couple things. First of all, which is interesting. Even today, you look at and yesterday, continuing to stay elevated with equities seeing the bounce they've had the last week or so off of that low from last month has been interesting. So I mean, I think what I'm hearing from customers and participants, whether it's big or minis, is that they're starting to use VIX as a hedge play for some insurance, getting long on the future side, whether it be the front month or the back months. We're seeing some convexity play there to sprinkle within some of their positions. I mean, it's we just had a move from our product in the mini VIX that we had with their price in nickels. We're now we put them into pennies for the minis to kind of help people hedge more precisely, because there's a little bit of slippage for the retail folks. So
a lot. That's a big change.
It is. I mean,
that's 75% cheaper, right?
Yeah. So the margin has
80%.
gone down a little bit. I mean, obviously it moves from front to back. I mean, I think right now the margin for the minis is like 1,200. For the bigs, it's about 12,500. And then it kind of tapers lower from there. But it's been a month. I mean, we've seen some increase in participation already with the minis, and then spreads have tightened to about 0.33, whereas like the month before, I think it was like 0.6 or something like that. But it's doing what we anticipated. It's only been a month, but I think the timing's right with the Fed meeting today, and then obviously looking forward to December and all the inflationary data in between with the couple unemployment reports we'll have as well. So yeah, I mean, I think it's been good. I mean,
heck of a range.
Pardon me?
Yeah.
Heck of a range that we've had, all year.
Yeah,
okay.
No, it's been a good range. There's been a little bit of a lid on it, which I like.
Yeah,
it makes people feel more comfortable from obviously the long side, but not only playing a little bit from the short side too. They're not as hesitant to short vol too on some of those big moves.
Danny, I talked to some people that specialize in VIX. They trade it. They know all the Greek and everything. And one of my guests told me that actually the more successful strategies have been selling volatility during this time frame than being long vol. And that's when the VIX was even going up on this last break in the S&Ps. How is that possible? Is it just, the way they're spreading it, or they're not just outright short VIX? I don't know how they could make money being short VIX on a move like this, but can you explain it to me?
Well, yeah, I mean, I feel like, obviously volatility is, any product itself will subside on big moves. So we've seen the equity market whipping around the way it has. We've seen earnings, different earnings reports and volatility there. So premium, selling volatility with VIX, I think has been an okay hedge, but they are probably, we've seen, I talked to a guy yesterday that when he's selling vol, he's definitely, getting long the other side of like an ETF, like some of the ones that are out there, like the Barclays play just came back, VXX, we've got some other ones there and there. So they're heads. They're not just, it's just not like naked
Right.
play, but there's more, what I'm seeing more from customers and just feedback from buddies of mine that are trading it, even for the first time. They're trading it to get flat. I talked about this last time we talked, like the new customer that's coming in that hasn't really traded it before, it was because we were in a one-way market, where now we're seeing these intraday swings where you can really get on the long side and the short side, selling it and be okay, right? And they're even hedging it with equities, cross exchange products like E-minis and mini Dow. So if they're selling it, they may be long X amount of E-minis or mini Dow, which is great. I think that's fantastic. Or even across the yield curve and treasuries, particularly the short end, where we've seen some big moves there, with unique hedges that have not been around, really forever for some people's careers.
It's a new game.
It's a new
It
game.
is a new game.
Yeah, which is great. I think that you're not just putting all your eggs in one basket, trading against other exchange traded product or ETFs to hedge with. There's other things that you can lean on that haven't been there really ever.
Danny, do you know if it was CBOE or CBOT that acknowledged Tradeview Markets as a broker that they're happy to be associated with?
Well, CBOE, we're very happy to be associated with.
All right, and that a lot of platforms, especially in FX, do not allow people to trade VIX futures, no futures at all, right? So
no, it's I talked to some of your colleagues, and John and Jason and I, we were out a couple of weeks ago and talking about some new participants on the TD market side that haven't really traded VIX before, but now are in here and obviously watch you and Mike's show on a daily basis, and the color that you guys provide is fantastic. I know it's an international audience, but it is when markets are moving, they're a hell of a lot easier to understand.
Yeah. Mike, you have something for Danny?
Yeah, a couple of things. First of all, with the lack of being dramatic, I appreciate the tighter spreads, because first of all, this is, and Danny, I know you've been a high level trader. If not at the same time, I don't mean to put down what you do, but I don't know if you're juggling both. I certainly have a feeling you might be. But the point,
go off.
Well, the point being is usually when a trader, wants to hedge, I find the trading mentality is very few traders as a trader mentality are up so much where they want to hedge their profits. Most of them want to hedge if they're losing. They want to hedge protection so it doesn't get worse. Correct?
Correct. Yeah.
Very few traders, myself included, when I'm
Great
up
point.
whatever a precipitous amount, I'm not saying, oh, I'm going to hedge here. It's not the mentality of the trader, even at our level, is to take some off and buy baby blower on the pullback. But in these, especially these times, and what will happen maybe in 4 hours from now, is that I find when wanting to hedge is, first of all, the shorter the time frame that I want to hedge, the more taxing it is, I think, for me, because you're essentially trying to time the market the shorter the time frame it is. And we know how that goes with timing the market, which is even better for tighter spreads. My point is saying that it's a less of a taxing a process when you're in the weeds, to use another term, for you to be able to use this product without being that complicated. Because usually when you're in disarray or whatever emotion you might be in, or maybe focused and want to hedge, this makes it a lot more palatable for a product to go to instead of scrambling for something else. A great tool to have. And another comment I said is, you said there has been a lid on the VIX, and everybody was waiting, was saying, Coach and I, through all our podcasts or webcasts, whatever you want to call it, we're not alone here. It doesn't still make it right, but it is a high level opinion, is we were always waiting the VIX to hit 40. And that was what kept everybody from going in, from dipping their toe in. Now, as we go back to 26 and change here, it being Fed day, I'm hoping the VIX products, as you said, it's suppressed, goes to 30. Now, which was the old 40, scares everybody. And by the way, this is an opinion, but this is what I see right now, seeing that's also suppressed at the moment. And if you are down, this is definitely a type to hedge and use the product. I don't know whether I would ask one question though, Danny. What would put me more apt to be trading the VIX as an entity or an equity or an ETF as opposed to the futures? What would be what would be saying
The advantage?
What's that?
The advantage over?
Yeah. What, you know what I'm saying? Instead of me saying I'm going to buy the Qs or the TQQ, which I have something he says I want to go that way. What is the difference?
Well, I feel like with the cash settled with futures, I mean, and the fact that there's a term structure tied to it that you can see in how it moves in comparison to other products like ETFs. And again, there's hedging across both that people do very well with. I just feel like if you're in the markets right now trading futures, it's finally a trade that we're not just directional. And you're just, I mean, vol was so low for so long, we were below 10, now we're bouncing between 20 and 30. I mean, consistently, that just hasn't been seen, where you're looking at other products where, to come out of the cycle with the Fed that we talk about, I mean, everybody's obviously expecting 3/4 of a point. The forward guidance will be for December will be watched upon closely, but like, I mean, they're aggressive. I mean, we've got, even if it's, and we're talking about, they'll seem dovish if they do, 50 basis points and then, do a quarter until what, like March or May, then we're at 6 in Fed funds.
That's
You have to be Nostradamus to predict which way it's coming out of this range.
Right.
But I can tell you, Danny, that I think that when it does come out of this range, especially if it does to the upside, there's pretty good potential, maybe 52. I would define it maybe, 20 to 35 would, another 15 would give you 50.
Yeah, I mean, look,
So,
SPOOs are what, down 20% this year, Dow's down about 10. I mean,
and that's the amazing thing.
Yeah.
The range.
Yeah.
The range. Look how long this range has been going on for since 2021, and we're almost in 2023.
Well, what I like about it too, Coach, is like now, and I think we talked about this, when we talked the last time. I feel like participants now, the retail audience, I mean, I don't even like calling it a retail audience, because they are savvy, they are knowledgeable, they have way more information than we had when we started trading. And it's a force in the market, and that's why we're making changes for them, moving to pennies and accommodating the audience, because they are a force. And I think that it's a
I agree.
A participant,
That's us.
Understands the market, right? And
We're a force.
Cycle now, right? They've been through a cycle now, and that, when it first started, when we came, I mean, we haven't seen something like this with COVID.
Fade retail, they're always wrong.
No, I mean,
right?
it's not. They aren't, and I'll talk to a retail trader, then a bank, then a hedge fund, then a prop group, and everybody has a diverse look at the markets, and that's why they work, and that's why we're moving the way we are, and that's probably why it has something to do with having a lid on VIX futures right now, because there is different forces at play and different views across that market that are important, and we're starting to see it's slow pace moving into this type of environment, because I think it's a little bit people got their toe in the water, but when they see that really VIX futures are a pretty straightforward product that not only can add some insurance to your positions, but now you can trade around it intraday at a high level and use other equity products as indicators while trading VIX futures.
You know, that was a great suggestion that Mike had. Mike, am I reading you right when you were talking about using the VIX instead of liquidating positions? Perhaps you want it to hold longer term, that you lay on some VIX when you're in profits and you want to hold the stock, not just because you're looking for a decline, but as a way to cushion if there is a decline.
100%. And as what I even quoted this morning, Jesse Livermore stated, the hardest thing to do is give up the first and the last eighth. And usually it's you know what, I'm pontificating. I want to bring a point back before that, and this will edify my point.
And before that though, Mike, Danny, really calling people retail traders to me is a compliment compared to calling them newbies.
Yeah.
You know, when someone says I'm a newbie, I go, don't say that.
Yeah.
I'm a trader.
Yeah.
Learning.
Well,
I'm a trader on my journey.
A retail trader is ambiguous. It's like where does that level? Where is that line? It's like being a chiropractor.
Well, a noob sounds like a boob. Okay, a noob, you're a boob. You know, you are who you say you are. You know. Anyway,
my mom says I'm special. That's all I know.
You know, only your mother and your wife and your children. Yeah. So getting back to the Fed.
To answer your question, yes, it is. It would be a great, it's listen.
Do you do it?
Do I do it?
Done it?
I've taken, I don't hedge. Do I hedge on? No, I don't. I don't think I've ever hedged on being up, No, I don't.
Yeah, you trade it.
I don't usually have that big of a book where it's that one-sided where a wave comes and I'm more tactical, you know?
Yeah, you are.
Yeah, so I'm not in for
it's risk management. I mean, I was talking, we had a risk management conference in Iceland last week. 2 weeks ago, we were out there and it was a risk management conference and we hosted, CBOE does it every year. We're doing one this coming year in Austin for the F1 races, which should be really cool. You guys should definitely check it out. But there's
interesting.
I mean, when I'm talking to people that were there's people there, you know, with billion-dollar funds. There was a couple of guys that were there from Germany that trade, you know, smaller on another retail platform but they all say the same things when they're talking about risk. Like, you know, you're not going to lose taking a little bit off the table, right? Like, and you're also, because you know, people get FOMO, but it's like, you know what, take some off. You can always, and if you take it off and it's better, you know, at least you know, whatever. But like but they all say the same thing about VIX too. It's like with VIX, you know, it's kind of what you're saying, Mike. Like, it's helped me stay in positions a little bit longer and trade around those wings, like we talked about last time, in a way that really hasn't been possible up until this past year or two. That people are starting to see that. People are starting to look at the data more on the VIX future side for those signals of when to maybe put it on. I mean, I think that you really can't overthink it. You just got to put it on when you think you should instead of time it. But because in this market, it's impossible to time. You're never going to be right on top of it. But it is interesting that it's different participants talking about different risk management.
It's the only thing we can control, Danny, is risk.
Okay,
Can't control anything else.
If I may step in, what I think is important, especially like a day today, why don't we go to John and he'll share our screen and he'll you know what, he'll put our words into action. So John.
All right, John. So John is going to show you how you could do this. Okay.
Oh, that's awesome. Every time I see a new platform come up, it's like, you know what I mean? It's brilliant. I love it.
Great looking.
Okay, so John, this is a Tradeview platform.
Yeah, this is called Tradeview Trader Pro. It's our most
Wow.
robust
incredible.
futures trading platform. So as you can see, what we have up here is a few charts, a few DOM tiles for the VIX and the mini VIX. So at Mike's direction, maybe I can go on and put on some trades, show everyone how to navigate the platform.
Yeah, go ahead.
Yeah, let me add to what they said. This is a good looking platform. I mean, Mike kind of insinuated before, we've seen a lot of different ones, and it's almost like a nice car driving by that you haven't seen before.
Yeah,
This is nice.
you like the body style,
Yeah.
but you have to drive it, right? You look at a beautiful car, you don't know, you
Right.
got to put the key in, right, Mike? Or kick the horse in the ass as you get going. Can't hear you, Mike.
All right, so I threw one long position, so we have a directional position of 1. You can see here on the top the quote board, pretty tight spreads today, guys, on the mini VIX.
Yeah, one bit. That's a real tight spread.
All right, so just put on some limit orders. We'll see what happens there. Can you guys talk about the I guess the volatility today, or the pricing, the quotes today? What you guys think that might do with the Fed?
Well, I think Jerome Powell's going to be mean again today. How about you, Mike?
Oh, go ahead, Mike. So,
You're muted, bro.
you're muted, Mike.
You know, Danny, the whole market wants him to commit to saying we're only going to go a half in December. I don't think he's going to do that. And it may not be a complete rug pull, but we could have a negative day, pretty negative day, if he doesn't give the market any, hope that the pace of interest rate increases are going to slow.
Yeah, it's interesting.
The amount of increase, right?
You've seen that, Dale, too, like the dollar kind of leveling out, like what, 111.55 or whatever. I mean, it's expecting him to be a little more dovish this afternoon, like in the Q&A. But then, there's so many more central banks out there with, you've got BOE this week. You've got, although you saw like Australia, the Aussie dollar come off this past week. And they're still like at 30-year high in inflation. And it came off.
Aussie looks good, man.
Yeah, it looks good. It went like 64 or something like that. But it's so there's different indicators at play. But you want to be long dollar, you want to be long gold, you want to be long bonds, you want to be long equities. I mean, it's hard to. There's a lot of plates that Powell's got to split this afternoon. I think that when you watch it during it's not going to be like Jackson Hole where he's going to be able to just say something, walk off, and drop the mic.
No,
it'll be.
They're going to ask him that question.
They're going to ask him some questions, right? So that's going to be when people are going to be, and it's going to be, as we all know. I mean, it's not just right after that press conference, but the 24 to 48 hours after will be telling in the market.
All right, I want to get to something here. All right, suppose Coach and now he can hear me. Coach and I both believe that he's going to drop the bomb or drop the ball, if you will, right, Coach?
Yeah.
Okay. So how would we do this on our platform? We want to buy some VIX futures for probably this being 10 o'clock Eastern. If the meeting starts 2 o'clock Eastern. So right now the market's pulled back a little bit. There are there's some positive stocks on the screen. And I want to hedge. This is a place where I'd like to start because for example, so let's buy the VIX right here. The VIX right now is where? Let's look at the indices, or where the indices on the VIX on my screen.
And also, guys, keep in mind that everyone's so focused on the Fed that the NFP could be a more significant number, especially after the Fed. Say, for example, the Fed goes, we're not going to commit. We're data dependent. We're not going to commit to 50 bips in December. But then we get an employment report where hourly wages are softer, or, inflationistas don't get everything they want in that employment report, then people are going to come back and go, well, you know what, the Fed could go only 50. Wages are starting to slow. So, or maybe it's a lower number than expected. was they're talking what, about 200,000 on the headline number?
Yeah,
I know it's a different subject, but no one's thinking about the NFP after the Fed to see if it verifies what the Fed is saying. I bet they wish they had the NFP before they had this meeting, but they probably do.
I know that we got two of them between now and December too, Coach.
Yeah.
So it's and a handful of inflationary data. So it's not.
Yeah,
I mean, he'll probably lean on that. I would expect, to kind of say, well, we've got some data. I mean, they're always data dependent, but we've lifted off quickly. I mean, I realize it's different between now and back during the credit crisis because, we're at 4.5% now, or around 4.5% the unemployment rate, where I think it was like 10 then, right? So it's a little bit. Times are different. I don't know.
yeah.
It's
They may have to raise their inflation target from 2 to 4 would be okay. I've heard some rumblings about that.
yeah.
John, can we have can you see the cumulative last volume on both the minis and the main ones? The main ones, if you will.
Absolutely.
Can you see lots traded? How many total?
For you guys or just in general?
In general.
Yeah, I mean, I'm looking at the Nove. Are you in Nove or are you in Trade and Tees?
No, on top where the size, like the bid and the ask size on the main VIX it's a very liquid.
Oh yeah, I mean 26.10 at 26.15. I mean, we've already seen almost 13,000 traded.
Well, that was my question. They're very liquid. That's good.
Yeah,
very liquid.
They're all. I mean, it's very liquid. We've got 6 months listed in the minis that are now in pennies, but then we've got we go farther out. It starts to get a little bit less liquid the farther out you got bigs. I mean, but even
what's the sweet spot? You would say, John, Danny. I'm sorry for the.
I mean, well, I mean the Nove are trading right now, but I mean, I feel like people are starting to roll in these 22s.
Okay. No. I appreciate that.
So we've got like 10,000 almost trading there already. I like to roll a little bit earlier so you don't in futures, so you don't think about it so much. And especially when, I mean, it's 26.10 bid in the no 2022s and it's 26.15 bid in the these 22s. So,
no, I see. I mean, I love everything. When a platform opens, I automatically go to bid and ask in size. I know it might be antiquated, but that's what I do.
For sure.
But I could see in the bottom left all completed orders in green and no, it's a sexy platform. I don't look being dramatic again, but it's a great product. And if you don't have it as a tool to use, especially the way they trade in this market being 24/7, you're going to a gunfight with a knife.
Well,
and I don't want to scare people off. You have an opportunity to get in there, to do something about it.
It's another tool.
Yeah, absolutely.
Well, and keep in mind too, we trade around the clock. So
yeah, we do.
Trading hours. I mean, there's news that came out early this morning with Russia, Ukraine, and the grain corridor where the exports come from Ukraine that they were kind of like hinting that they may break against that agreement that the UN set, and they kind of retracted it. But that's, the markets don't open until 8:30, but they really are around the clock. So we've global trading hours that you can protect your positions overnight with whatever's happening in bigs and minis for VIX Futures. So that's something that I know that you guys look at closely. And
I do. And whether you're a retail trader or not, it's something that we all listen. Like I said, after seeing this and saying it, I'm just talking about the to have the availability to do it. How can you not? You know what I mean? How can you see this and not know how to use it? It's an advantage. I don't know how. That's all. That's that's how I feel.
Yeah,
that's how I feel. I really.
What have you guys been hearing from just in the chat rooms and everything with some of your traders with VIX?
That if you were to look at charts and be empirical, you would think there was nothing wrong. If you were to listen to how would you say it? The qualitative stuff, and you read Twitter, and you look at you listen to the pros, especially the longer they go out. It has nothing to do with age. you think it's quite the opposite. You know, that's why we're hovering around this 50-day moving average for so long. That's why the VIX is in this suppressed area. You know, either like a, you know, it's either a beach ball or it's going to deflate. What am I hearing? I don't listen. That it's mixed, because the indicators that I use, and I believe it's a high level, and it's not proprietary. I pilfer it from other people, but the fact is that, you know, Goldman is positioned. They're now positioned well. Hedge funds are still short. They took off a little bit of shorts. CTAs are short and they have to catch up. But you know, I still don't know if they've been still adding or going to these into crude oil, these oil stocks, which by the way, coming back today very nicely. So, you know, the great rotation is still evident. And I know this is that nobody's looking for the old leaders to become new leaders. That's all I know. Everybody's you know, that things have changed, like you said. So, you know, I know that my Zoom and Square might go up 10, 15, 20% from here, but things are different. And that's not, you know, the way you're going to, you know, that's what I see.
New game in town. No, not Fang and MAGA anymore.
No, it isn't. And there's a page of them here, and they change it all the time. Then we're in the midst of earnings season. AMD just changed its tune today to a degree. So you never know.
Yeah.
Danny, really, I want to congratulate you on CBOE.
Yeah.
For giving people a way to manage risk in a most uncertain environment. And congratulations on the growth of volume on this contract. And I think it's going to end up being one of the biggest globally.
No,
And,
the very liquid product, 8 by 341. It's liquid as they come. Beautiful on the top.
Yeah, it gives people another way to go.
That's
Besides,
number one. And the spreads being tighter, a very liquid product, and the spreads being tight as they come for a hedging position that you can trade all the time is something you got to get familiar with. That's it. I don't care if one person or 100 people say the same thing to anybody. My mom, I tell her, get familiar with the VIX futures. I tell
her. Yeah, and you could trade futures and keep your cash in bills. You know, buy 90-day bills to use as margin. They still let people do that, right, Danny?
Yeah.
Yeah, and so, you know, instead of paying a broker loan rate to get leverage on a VIX product, you could earn interest on treasury bills and have the leverage that you want, and no decay in futures compared to a lot of those VIX products. I know I owned one that doesn't exist anymore, and they keep rolling it over and doing reverse splits and reverse splits. So even when you're right, you have to be more right.
It's the biggest detriment of that product. Correct.
No decay in futures.
No, that's the best.
It could be a carrying charge market or a premium market, backwardation, but there is no decay on the instrument. Big advantage.
Well, and then too, Coach, with how it's trading right now, I'm not speaking for your clients, but like, I'm sure that a lot of them are finding ways just to not have to carry positions because they're just getting flat. They're taking the profit off the table, getting ready to get back on in the morning and see where the markets are at. This market is
nice day trading market too.
Great. Yeah,
it is.
Yeah.
And you know what? I've been day trading very well to get out of core position mistakes, being wrong. You know, and that's another good product to have, because if the market is this volatile with this product, you can take good money out of the market on a daily basis.
Sure.
You can.
Yeah.
All right,
So,
here's my nose for Pinker.
We'll see you the fourth time. Hopefully it'll be the fourth time.
I think VIX pops after the Fed. And if you're long into it, book half and let the other half ride.
All right, I like that, Coach.
Okay.
John, are you okay with showing everything in the other line? You good?
Yeah, I am just fine.
Okay, thanks again for joining.
John, thanks.
John
Really nice for demonstrating the platform that Tradeview offers.
And it's important, just one last thing to note, if you any listeners want to get a demo account, our website is futures.tradeviewforex.com. You can go open it for or request a demo account. You can also apply for a live trading account. Check out all our contract specs, margins, trading hours of all the exchanges. Of course, the CBOE is a preferred product for our clients, and it's all the specs and everything are on our page.
The CBOE is as blue chip as they come.
Yeah.
It's like George Washington and apple pie. I'm serious. So anyway, great looking platform. That's what if I was young and when I was growing up, if I had pictures of these, I put them on the wall instead of Farrah Fawcett. I swear to God, that's a good looking platform. Thanks again, Danny.
All right,
Danny,
guys.
great catching up with you, brother.
luck.
All right, guys. Have a good
All
day.
right. All right. Adios.
Bye, guys.
Thank you, Mike. Thank you, John. Thank you, Danny Jisa.
Yep. Cheers.